So as we get into Bitcoin, I want to talk about just right off the fucking bat here, the most important number, the most important level, the most important everything that I think this analysis is really going to be hinged upon. Now we're going to come back here into the underlying market dynamics a little bit later at this analysis, but I actually want to start this off with what I think is the most important thing today, which usually this is actually the most important thing on the global open interest. Actually, we did see a bit of a reset yesterday, by the way, so that's going to be a big focus in a few seconds here. But first things first, the moons! No, I actually didn't intend for this, but this actually did land at a pretty fun place right here, right? So I do actually want to go over this rather quickly, in the sense that, look, you can backtest these damn moons for the past year, and they actually have a better than 80% hit rate. Look, I know it sounds fucking crazy. I know it looks absolutely ridiculous. I know that to the smart, scientific people, scientific minds of the world, you probably look at this and you're like, that's bullshit. And hey, maybe it is, man. But just blindly trading these for the past year, that's actually been, well, rather profitable. Let me turn off the alerts for right now. We'll get to that a little bit later. What I think is actually a little bit more interesting and a little bit more relevant, and something that's a little more tangible for an explanation as to why these things have generally be working, especially around here on about the 19th or 20th of this month of January, as actually, which yesterday was the 19th. Yeah, today's the 20th. You will actually notice, as I have put on vertical bars with all these blue bars, and our most recent one, obviously the green one here, that all of the 19th to 20th days of the month have been marked off here, and they typically do coincide with major highs and major lows on price action, sometimes even macro, or I wouldn't say macro highs, although we do have one macro low right here, but major highs and major lows that have been some pretty easy trades, to be fair, in hindsight. So I'll just briefly run you through this, but obviously you can look at this one yourself. I'm going to take off the moons for right now, and you can see right here, coming in from just 1 year ago, the 21st of January of 2021, that was your major low at about $29,000 before going up to $65,000 right here. This obviously in February, your major high, another major high right here, another major low right here, obviously the macro low right there thus far on our $30,000 tick over the summer, then again right here, and then again right here on the bear trap actually. And then what do we have right here? Another low before a $10,000 move to the upside, and then another low right here before a $30,000 move to the upside. High right here. Another high right here, low right here before a $6,000 rally, and then once again we're kind of hitting into that region. So what is the explanation for why this could theoretically work? Well, around the third Friday of every month is what's known as regular expiration for equity options. And because Bitcoin does essentially trade as a higher beta asset to, well, US equities, especially the indices like NAS, you can probably align that you're going to expect similar sort of volatility around those, around those dates. Now, this is obviously, as you have seen, not always going to be a low. Sometimes we do see some highs within that region, but the big sort of thing with it is that a lot of the time you do see major pieces of price action pivot around those regions. And in this case, coming off of a major move to the downside like this, probably, or at least it would be a little bit more on the upside potential right there. Of course, at the end of the day, price action is going to matter most. And what I actually meant to really start this stream off with was right here. So you're going to notice today, similar to yesterday, but even more so pertinent today, is that all momentum oscillators from a stochastic momentum perspective right here are postured around the 41.6 to 41.7 region. Here's your daily, which by the way, did fulfill the criteria for yesterday to remain with upside momentum from a stochastic perspective. And that will be continuing into today with any sort of a closure today above 41,700. Now, keep in mind, the more that this does kind of swing around here with upside momentum without really busting on through and doing some more interesting price action to the upside in this case, and realistically, back above that 42,400-ish region, specifically on a 4-hour closure, no less, or an hourly above about 42.7 would be okay as well. I do look at this as potentially a bearish reset, actually, is what the general idea of this would be. Now, we do see that a humongous setup is actually staring us right in front of our very face. And of course, what is going to be telling us about that? That's going to be right here with the HVP on this, which is obviously at pretty much, lows in this case. We haven't seen it this low basically since late December, before that nice $6,000 rally from about 46,000 or a little bit below 46,000 bucks all the way up to about 52. Of course, it did fail. This is not like a reversal signal or anything like that, but it does suggest that we are going to be seeing, 10 to 20% move, relatively fast, very, very soon as as well. And obviously this is also consistent with what we see over here on daily BBWP, which we identified a few days ago, now printing 1, 2, 3, 4 0 percentile reads in a row, in fact. So this is becoming incredibly likely. We typically do see these things on major reversals on price action. For what it's worth, it is more often a reversal than a continuation, but that is of course going to be decided by actual price action itself. So I want to keep these numbers right at the forefront of the stream. Again, 41.7 for the daily. The buy daily is also freshly up above 41.6. You're going to be looking at the 12-hour now, which is still having a nice reset here without giving any, continuation on price action, which is showing 42.250. The 6-hour is going to be showing what? Also corrective and will be remaining up as long as Bitcoin's above 41.650. 4-hour is going to be showing what? Is going to be showing, guess what the fucking number is? 41.650 as well. What is the hourly showing? Take a fucking wild guess. Once again, 41.750 right there. So a lot of numbers postured around that region. And you know what's very interesting about that right here is actually very simple. If we even go down to an hourly in this case, you will notice, if you are perceptive, that our last what would be higher low is coming in right around that region on this wick down that we saw yesterday after that first rejection from about the 42,400 region, the exact area that we kind of spoke about that was relevant for a 4-hour time frame. So, if you are bullish, you're looking at this as a bit of a swing failure pattern with your first higher low in the making right here. This is not going to be confirmed, at least from the way that I look at things in my view and my estimate, as long as Bitcoin's closing 4-hour dildos below about 42,400. But right now, it is looking a lot more likely that this is going to be a bit of a trap. So before, I do think that it was more pertinent to be looking for the downside continuation here. But here's the thing: when you see this sort of price action kind of hanging around what would have been the breakdown region without getting continuation, 1, 2, 3 days, it's going to start to wear out its welcome, and those typically are trap situations. So I want to bring this full circle with the title of today, which has to do with war. Look, if there is some sort of big announcement, like we're announcing war or something like that, it's like terrible, right? But if something like that really does get serious, I actually would be looking for an initial first flash crash, to be quite honest with you, and then perhaps over time, if Bitcoin truly is going to be the risk-off asset that I think a lot of people look for it to be, which it has not been true thus far, to be fair. Or not to be fair, it's like it has not been true at all, as of recent, or just in its whole history. That would be, well, likely good for it long term if it wants to emerge as something like that in the event of like some serious actual war talks between Russia and Ukraine, which obviously incorporates the U.S. and then its European allies, and that gets into a whole terrible situation that probably no one actually wants. Anyways, I would consider this a trap confirmed and reversal, not just in progress, but also confirmed with, again, either a 4-hour closure above 42,400 or an hourly above this wick rejective high right here, which is also directly in line with the hourly 200 simple at about 42,700. Actually, a couple ticks above there, but that's fine. Anyways, close enough is close enough in this game, and this would be indicative of a bit of a a bit of a reversal right there. What I want to bring this forwards now and kind of loop this one through is the global open interest, of which we have seen it actually reset pretty much all the way down to the areas that we were looking for. If you caught this on the hourly data feed for the global open interest, which anyone can get right now, you can find it in the link description below. This is all free information. For what I know, we offer up the most free information across any of the interwebs, and if we don't, just let us know what you want to see, and we can probably offer it up if it's reasonable and doesn't cost us a fucking arm and leg. But yes, we can do this one right here. And we did see an initial sort of crash, or I wouldn't say crash, but we saw a very big spike down right there, pretty much around what you would draw as a regression between all of our lows, not all of our lows, but the open interest lows that we did see from March, of course, September right here at 40, more recently in December, and of course coming in back in line with this region would be right around there. In fact, I put out a chart on this one on Twitter like a week or two ago. That would still be valid. Now, I don't necessarily know if those things work out in their totality, but I thought that it was interesting just because we do see a bit, you can just with your mind's eye kind of draw a regression between all of these lows. So I'm curious to see if that does hold, and then if it doesn't, well, probably the next shattering move to the downside would do it as well. But here's the thing: I do suspect that we are going to see a lot of shorts closing. A lot of this open interest, especially within the last month or so, was very likely short interest, and that makes sense. I mean, people putting on short positions in a major downtrend, a daily downtrend that goes all the way up to a 5-day and a weekly, of course. That is the time for that to be relevant. relevant. So if we are going to see open interest drop a little bit further, it could very well be actually shorts closing, which is kind of what you want to see in order to end your, in this case, our daily downtrend if you want to be, long-term bullish, obviously. So I'm making some assumptions here, of course, but I do want to pull this through with just another piece of information, that being the funny rate. Of course, we've seen this, slowly trend up from the December lows, of which we did see negative 0.05 or around there, just a little bit more than that, which is very similar and reminiscent to what we saw over the summer here as well, where we had that initial spike down on that first major, major heart-wrenching move to 30,000 bucks, and then of course trended up over time. There's your little bear trap right there. In fact, a rather big bear trap from 30,000 all the way up to 69 in totality, and then we got the same sort of thing going on right here. Not as impressive. Obviously, this is a much smaller segment, or sorry, much in relationship to the summer lows. It's a little bit more minuscule, to be fair, but that's what you do expect, because we're very likely looking at one major, massive macro consolidation, or at least that's the way they look at things right here. Gone over this a million damn times. Where's my damn chart for this one? Yeah, here's my damn chart for this one. Something like this, and you can see that Bitcoin is, well, you actually can't see it because my chart's a little bit off right there, but Bitcoin, Jesus Christ, my damn crossover levels are in the way right now. But basically the 618 retracement is actually directly pretty much at where we're at right now. So I do look at that as very, 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 very important, and you typically do expect at minimum some big bounces around that region, and at maximum some revert, your major lows in the context of a long-term, in this case, what would be an ascending triangle, something like this essentially. So again, when we are looking at something like this, which actually I will move down to a more relevant region right there, you can estimate that, about 70 to 75% full towards the apex of this would-be formation is about where you do expect a high probability of an actual breakout. So again, this is really, 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 really far away, and I should actually be talking about other things that are a lot more relevant before we get into that. So you know what? I'm going to get off that topic for right now, but hey, that obviously does imply that, look, as long as Bitcoin is closing, again, at dailies above that wick low that we saw from December 4th right here, I do not consider this a breakdown just yet, and I do not have targets that are actionable or reasonable to be looking for into the mid 30,000s until that does happen. Doesn't mean that it can't happen, but that is my trigger for that. Again, it's coming in from this wick low right here, and that is exactly how we saw it over the summer as well, and I would be looking for the same sort of interpretation right here. I won't go through the full explanation on this, but I do want to just briefly call this out because, well, it's fun and it gives me a little bit of drawing to be doing, but let me just find a damn chart for this. All right, this chart will, this one will do. And what do we have? We do have a bit of a fractal relationship between what happened over the summer and what's happening, kind of what's going on right on over here. Now, this is a potential. It is not confirmed. We'll talk about confirmation. We've already spoken about invalidation. Invalidation, obviously, with the closure on a daily, no less than your December 4th wick low. There we go. So I'm talking about this area right here over the summer and this area right here more recently, right? So let's first zero in on the area from the summer. You get that first initial major drive to the downside, right? Pops back up, creates a range high. Pretty much your range highs come in right around on that test at what would be the green 55, and you can see that that does hold consistently throughout the next 2.5 to 3 month long corrective phase. Now there are several tests back down to the lows of this, but again, no closures below. Even this one over here, it does not close below this wick low right here. It's extremely fucking close, but that is why a trap is a trap. But again, you get this first major move right there, boom, boom, and then off to the fucking races. Confirmed fully with your move back above the range highs, which was your rejective highs in June right here. Now, you will notice that after that second major drive to the downside, there was a slew of lower highs after that onto the close that was like pretty much right at the lows, to be fair, before the bear trap. But, I just want to kind of postulate over here. We could very easily be looking at something, that's going to take a long fucking time, basically. Anyways, where are your range highs? They're right here. Where was that first initial wick to the downside? Right there, obviously. Where's our current one? Right here. You can see it's already slinking over, being governed by the 21, just like you saw right here. And, well, until Bitcoin actually really gets an open and closure above that, there's not even like an intermediary confirmation on that. But of course, as we looked at earlier with the short-term reversal potential in place, that would be the first, probably most relevant signal for this, to get the next very small but important level of validation. That leads into obviously this condition. Then you're probably looking at something like this where it comes back down perhaps. And then if you do really see Bitcoin start to get back above, next the 55 in this case, which is starting to crawl its way back down below the the $46,000 breakdown level from basically December. That would be the next major thing. And then of course, full on confirmation, no questions asked with major targets to the upside, which we're going to get into in a second. It's going to be with a daily above the $52,000 region right here, just really even maybe a 4 hour as well. A formidable time frame at minimum would look pretty damn good. Now, here's also the thing as we get rid of all of this, right? Let's do this. And remember back over the summer, we did identify, although I did have major concerns with or skepticism with this as a head and shoulders, right? This being your left shoulder, this being your complex head, and this being your right shoulder over here. This was obviously, negated, especially after this region right here, just because you want to see symmetry between the left shoulder and the right shoulder, typically speaking. So when you see it kind of hanging on like this, probably not going to work out. Regardless of that, there were some pretty major targets to the downside. In this case, I mean, it was pointed down toward like $10,000. Didn't really think that that was reasonable, but there's an equally as important region to be aware of to the upside. You can actually apply that same implied move to what would be the top of your right hand shoulder, and that would be your implied target on a I guess a failure call of these. And what do you know? That's pretty much exactly where Bitcoin topped out more recently in the upper $60,000 territory. Well, we got the same thing going on right here, right? Where Bitcoin does have left shoulder, head, right shoulder, and your neckline coming in right around here. And let's just, be a little more conservative with it. And if Bitcoin were to trade above the $52,000 region, not just resolving that current range, it would also imply a target all the way up to the mid to upper $70,000 territory, which would obviously be in line with the other formations that we were looking about. And of course, I do want to call this out as well over here on CME. This is still very much valid and available, although sloppy as all fucking hell, but that's okay for right now. We're just going to move down the right buttocks there, as someone identified in a comment that made me laugh for a while the other day, but basically something like this, right? And you do have a falling channel or a falling wedge, no matter, depending upon which way you kind of want to chart it right here. Both are, it's technically more of a wedge, to be fair. If I go to maybe log scale, then it's more of a channel. Yeah, in this case, either which way, you are starting to see some signals that this one actually is looking for potentially a resolution relatively soon. You expect to see these sorts of things when you get that first sort of double bottom on an ever so slightly higher low, which we have right here. Ever so slightly, and then what confirms it is getting back above that last rejective high, which is right here, and then putting in a little bit of a rally somewhere right around here, and then doing the old busting action when you come back down around here. That would be bust. No, that would be bad. In this case, you want to see something like this, and then maybe a bit of a pullback back down into 45,000 bucks. And then of course this does have an implied target as well as a falling channel, which would be pointed up towards about $55,000 or so. The problem with that is that if you are bearish, that's exact what that if you are bearish, you're going to just draw on your fucking charts. No, if you are bearish, that's where you're looking for on your next lower high for the weekly, essentially, which would be right between the 0.5 and the 618. So I do want to represent both sides equally as well. And I do still think that this is probably the more likely thing to be happening. I do believe that whether you're bullish or bearish, you're probably looking for major bounces from here before continuation if you're super bearish, or you're obviously looking for bigger bounces right here if you're bullish, because you're bullish, and well, up equals good, I guess. But ultimately, this would be the big bad problem area, assuming that validation happens to begin with. So please do understand where I'm kind of drawing all these conclusions from. You even actually see the 4 hour 200 simple kind of governing this area as well right here. Or sorry, is that no? Apologies, it is not the yes, actually it is right there, and I will actually move in line with that. It's probably gonna be better. Anyways, a little bit more tangible in this case. So ultimately, that's kind of what I'm looking at right now. What would negate this, and what would essentially make me, I guess, look for a downside move first before anything else? Well, it's pretty much the same shit that we looked at right around here, right? Remember, all of the momentum oscillators on pretty much all time frames are postured right around this level. Pretty much the higher low that you'd be looking at if you do want to be bullish right here. Just point blank period, nothing more complicated than that. And you're looking for your next sort of short-term, medium-term validations above this region right here. Until then, well, going to be a little bit of a waiting game. I do think that we are looking for a resolution of this, as I did say before end of week. I was even looking for it more or less yesterday. In any case, we obviously didn't get it. We did get a test to the top side and the bottom side of those ranges, but not an actual breakout in this case, or at least confirmed breakout, of course, as no official closures were had above or below those regions. And so I am looking for this, probably before end of week, and likely going to be catalyzed by one of the situations that you're hearing about in the world right now. Anyways, hopefully that was helpful, and there you go for Bitcoin. Oh shit, I should actually talk about like what's your downside, or what would be my downside target if Bitcoin does break below this region right here. It's got to be the same one as before, you know, back down to the $40,000 level. I would be looking for another bounce off of $40,000. I don't know if I'd call continuation to new lows just yet based off of that. I would be looking for a short-term bounce here, and then I want to come back to it and see it again. I wouldn't have a further call on that. Obviously, if 40,000 does let go and you do see a closure below this region, below the 4th of December wick lows right here on a daily, then yes, I would very likely be looking for, I would be looking for, you know, a move down somewhere around about $38,000, give or take a little bit from that target. Until then, though, I do actually think that Bitcoin has a bit more of a short-term try right here. It's kind of the perfect conditions for this. Extremely low volatility. No one's paying attention to this market right now. The market, you know, is, is devoid of most participants, not even just like, obviously not just retailers, but, you know, pretty much everyone. You know, it seems like no one's talking about it anymore, which is exactly kind of what you want during these more important pieces of price action. So with all of that in mind, I hope that this was in some way helpful. And there you go for Bitcoin, sirs and zers.